Hi, everyone. Mike Venezia and I are going to be talking markets here today. TradeGateHub.com is where we do it, as well as our sponsors, TradeView Markets, where it's a broker you have to take a look at, do your due diligence, take a look at spreads, and all the different instruments you can trade, more than I trade. Mike, good morning. How are you today, bro?
If I was doing any better, I'd have to announce a reverse stock split, Coach.
All right. I've been reversed out on those splits. Yeah, I love it. Love it. Anyway, I just want to dig in a little bit on Newmont because we've been mentioning it, and you go all the way back to the bad earnings report here, Mike. Where it gapped down, and they said they were going to stop producing in one part of their mine. It was too expensive with energy being up and everything. And all the way back here, even though gold was railing, it was dead, like it had an EKG of someone in a coma.
Right. As a matter of fact, we were having a discussion if it was even a best of breed anymore at that point.
Right, we were, and then we made a new low here before a nice little bounce, and the RSI reading was 23. And last week I said we could get a third drive, one more low that would not confirm. And that happens to be the case. Of course, you need a green candle to give you, trigger. But I'd certainly be on the lookout for this, because if we could get back through 45,
right,
and the dollar pulls back for a while, I could make a case for it filling that earnings gap, Mike, around 50.
Okay, what I would like to see with one of those green candles, as you say, with the proverbial third drive down, is volume. You're coming up to the end of the quarter and the end of the month, if you will, and Newmont's a heavy options traded stock, whether hedging or just taking a position. You know what I mean? What I'd like to do, and just like most, maybe like most trades, setting up this third driveway, is I'd like it to go below 40 with a little bit of volume, get washed out on that drive, settle at that 40, and once again, just like you said, that whole number, go back to 45.
Yeah. Okay, well, that certainly could happen if the dollar's going to keep roaring,
absolutely.
Mike. There's nothing saying it's a top except one thing so far. Is last week, Bank of Japan was the first central bank, BOJ, to intervene to stop a decline in their currency.
That's correct.
And here we are. We're getting ready to test these. These are the intervention levels that they came in at last week. So if they're going to be tested and they use 1% of the reserves to, create this candle, they're going to have to come in and spend more money. It makes me think, between this and the chaotic action in the pound. Look at that chart, Mike. I mean, pound
I was
historic
watching
low.
it happen. Yeah, I'm sorry.
It took out the low when George Soros broke the Bank of England for a while in the mid 80s. So a little history there.
No, seriously, I'm a historian.
And so, I mean, this is disorderly. See, these candles, this has become disorderly. I really think all the central bankers need to get together and do some concerted intervention. None of them can do it on their own, but I believe concerted central bank action to stem the rise in the dollar is kind of an easy card for central banks to play. It would help Europe cut their inflation a bit because we're exporting inflation with a strong dollar. It would keep prices stickier here, so the Fed could continue on its reckless policy of tightening us into oblivion, because they'll say prices aren't coming down. They could keep tightening. So I think weakening the dollar with an intervention, and let's not put these central bankers past intervention. They're intervening in everything for 20 years already. So
why be shy now?
Yeah, I mean, that would settle down emerging markets. I think it would stabilize our market. Although I think if that happens, people will start looking at emerging markets that have actually the emerging market currencies. I just interviewed a guy from Wisdom Tree, said that the emerging market currencies are holding up. They've lost about 5% compared to 11% in the developed nations and the majors. So, something to keep an eye on.
It's not going to get the highlighter, but I'll keep an eye on it.
All right. Well, someone in our room was bringing up Brazil. They've held up pretty well, haven't they?
Actually, that guy, I think they told us to buy Melly first.
Okay. All right. Anyway, so so here we are, Mike. Look, I missed this. I wasn't short. I saw the trend line break. Now we're back here at the double bottom. I saw DSIs. You know what it is, Mike? It's directional
Dailies, yeah,
sentiment.
yeah.
Take a guess where the S&P is at.
I would have to say between probably 11.
5.
Wow, is that so?
Yeah. Yeah.
Well,
And
I have listen, but this is the thing, Coach, and we'll get back into the trading thing. On Friday, I'm sure it was probably 11, which was over. But as we know from a trading standpoint, the worst of the moves are
all
usually
right.
exacerbated on the way down. So, and Tim is one that knows this all too well, is that you have to make 20% moves just to make 40% of your money back. Do you know what I
Yeah,
mean?
I do.
So that's Kramer said it was oversold on Wednesday. Going into the weekend, I believed it was oversold. It was very oversold. Obviously we Monday was a down open, but it wasn't a precipitous down open. That we opened somewhat slightly. So, and I don't know when was the last time we opened up on a Monday. So given the turnaround Tuesday, it was just, picking these, everybody's in the same boat. Everybody needs 1 or 2 days, because even can you go to the SP? Yesterday's close was even what the last 10 minutes was even. Some of these stocks fell
Yeah.
$2 in the last 10 minutes. People right now at this open as we speak at 11:06 Eastern, whatever it is,
Yeah.
still are on, still are AMD's
There's
up
a lot of
$2,
fear.
but AMD dropped $2 the last 10 minutes. So people
Yeah.
they're still rebalancing before. And like I said, it before here, it's the gap is filled, and we'll go to the spies in a second. And now it feels like there's
Okay.
a battle taking place.
It's your better hold here, Mike. You look at this chart. Here's a 200 week, and here's some type of important neckline.
No, I'm not
I mean,
well,
better hold.
no, I'm listen. I did reposition. Any of these, there were two, like I said, there was no, like the style that we've been saying all along on Trade Gate Up. There was no swing position set up for me. It was either a stock, gamble. I hate using that term. That it would be an up open and some of these short squeeze stocks would pop. Or I went with best of breeds. I didn't go with any meaty, some
Yeah.
tertiary stocks that I think are bottoming or forming a base. That was not in my repertoire. It was either, if I was going to hit it, I was going to hit it with the short squeeze pop and get paid, or if I was going to continuing this by this DSI and the S&P going from 12 extremely oversold to 5, forget about it. I don't want to use the vernacular, but
Yeah.
that's where I stuck with best of breeds on the way down. So it's tough.
Yeah.
I'm still trapped on some things.
You know what? This is really the key of the market, isn't it, Mike?
And
Right here.
Google too.
And Google.
I
Okay.
think it is Google as well.
Yeah.
I just
So maybe Apple holds this 148 level. If it doesn't, I think the market's in trouble.
no,
Market, it would help it if it could close over 160. Then maybe you'd have a shot for, up towards the highs.
no,
We
but
got
I
through
go punch
160.
up Microsoft, Coach, for example.
Well, I'm going to let you take over the charts, Mike.
Yeah.
And, so let's say the market bottomed yesterday at the close, and we're going to have a, 2-week, 3-week counter trend rally. Nothing to write home about. But 3,900, you're talking what, 5%,
Right.
to 5% back. What would you be tactically looking at in a scenario like that? Because I did interview someone who said, Dale, you know what he's telling people? Shorten your time horizons.
Well, first of all, I consider I have a thick skin, and although I've been reeling in my parameters, sometimes it's a little bit too late to a degree. But you want to call me a swing trader? Not my greatest acumen is day trading, but that's even getting a little bit antiquated with fighting outside sources being algos, but I'm hanging in there. But that being said, it was either taking the quick trades, like I just said a couple of minutes ago, or if you're going to start to build a portfolio, certainly right here at the SPX, I wouldn't, as I go to my chart here, I wouldn't talk you off it. And I am, I still have a lot of trepidation as I look at AMD and Microsoft. You want to see something?
Yeah.
I think we had a nice rally, a couple of days, and Microsoft, is still below the proverbial short-term 8-day. which is the short-term trade. It's below. I don't, what are you going to do? I mean, it's not often that Microsoft gets an RSI of 30. And the other ultimate kiss of death, going back to even a best of breed, or if you want to consider a mega cap stock, is you go to the weekly. Now, certainly I got my, I have it's almost like I have two sets of books, one illegal book and one illegal book. I have a long, one going long-term where I'm set up to my Microsoft once it hits, the 211 or the 220. Another one, AMD. Let's go. It didn't stop on the weekly, but I'm going to load up on AMD right here at 60, right here at this next level where it was, the box, if you will. But you know what? It didn't hold the weekly at 75, and I punted. No, I didn't punt it, but I'm trading around it. So I have, the SPX is what, 3,700. I have plans for 3,500. I have plans for 3,200. And I have certain plans, which, by the way, getting back to your initial question, I'm going to have to readjust on what was acting good and acting poorly, because the stocks that I did a video with, and I'll give you an example, like a GLBE that had earnings and it was acting very nicely after, was hanging in there. Just 3 days ago, broke the 200-day and broke down. Another stock that I thought was acting well was Las Vegas Sands. That one should look, that one, for weeks, that one wouldn't break down. It was like a springboard waiting to go, and actually it did go. But you know what? There was the Macau gaming or something happened, and the stock went from 41 to 34. Now it's back. What am I going to do there now? Now I'm like, I'll put my ego aside, and like I said, I have a thick skin. But now with that I'm afraid, I'm certainly not going to build in a position like I did to begin with. So I'm rethinking stocks that I thought that were acting well beforehand that aren't acting now. Uber was one.
So they're giving you another chance to consider just flattening out of the trade.
I agree, and that's what I'm doing until things make more sense. That the way that I'm looking.
And Mike, is the fact that you're talking about like lower numbers where you think you could buy Microsoft and some of these other AMD, just the levels that you would not have thought were realistic maybe a few weeks ago, now look like they're probable. Tells me what your bias is in the market.
Well, like I said, there's the catalyst that I see coming up in the future to drive these stocks that I've been looking at one way or the other are binary, except for earnings coming up, which we're doing, starting next week.
A lot of people talking about earnings compression and that they're going to be lowering them, and it's way overdue. Is that the next part of the bear market, the recognition stage?
Well, that's on one side that would hold us up a little bit, or either propel us to a point where we would capitulate, for lack of a better term. But the other catalyst, binary to bring, it's what's going to bring us up. It's either a major. I'll give you an example. What's going on right now is, and you're looking, and I have to go to
turning the dollar around and yields peaking would turn it around, at least for a while.
Coach, I learned this more than 1,000 times, and it's edified more than ever. We've been, and I have to give.
I know, by Helene.
No, it's not. It's not by Helene. It's
that cartoon.
No, it was actually pretty relevant because it is relevant.
Yeah.
Is that we were more oversold, and this is the Goldman note, than we've been in 30 years by sentiment. Okay. But you have to think of where this is just a normal Tuesday when you and I are talking at 11:15. We're talking that's what's going on right now. Think about the parameters of, we've been through a financial crisis, 9/11, COVID, several different cycles, and here we are sitting right here. And I'm not minimizing that there's that the war is going on, and then nobody's really happy with the administration. I'm not going to pontificate, but inflationary is certainly taking over the picture. It's tantamount by anything. So I want to see what happens with, when earnings come down. I want to see when inflation, and, I want to see everything calm down. Certainly,
the difference between everything you said before and where we are now is that it's a new regime.
Well, this is
of higher rates and restrictive monetary policy. When's the last time you saw that?
I don't. Well, you're the coach and you're the pro. That's why I say I leave it to the experts.
I have old timers. I can't remember when.
But the chart of Walmart was really emblematic of what's going on with the market in terms of how inflation is going to hit. Walmart told you that inflation is going to be bad, and then he said and the reason why it acted like this is that they said it's not going to be this one quarter, it's going to be a while. So I almost think that's like the sentiment of the market right now. I mean, things are oversold. Yes, it's yet to know if it's tactical. Everybody's
Yeah.
aware what's going on. And listen, I'm not splitting the atom by having my buy list, whether it's going to be now or 10% lower. But either, what we hear right now is to either, is take money out of the market or start positioning and dipping in our toe, as I've done. But certainly, I'm not. Listen, I don't mind timing the market when things are not extreme. It's easier to time when it's not extreme. When things are extreme, you could just, that's why solvency, there's now the word solvency comes into play, because people,
Yeah.
I said it today, how are you solvent to somebody? And they're hedging a little bit, but these expansions, just like you said, the picture in the dollar, something else is up there, just like something else was up at the Walmart chart. You know what I mean? Those
Yeah.
moves just can't be forgotten. Those are scars. So the moves in the
Good
currencies that you're
metaphor.
showing are scars that have to be healed and are not just going to be, it's not just a pill that it's not just a pill that you're going to be cured and go away with. And that's how I'm looking at things right now.
Well,
So it's either,
I think it's time for central banks to stitch up the wound so it could begin to heal, and not let this dollar momentum crush everything right now. I think the dollar has to turn, or we really have major problems here.
no, look, we already do. And this is why I took money. What would I take money off on the spies? 370.20.
Yeah, you
This
weren't
is it
looking
right
for
here.
much.
The
Yeah,
gap right here. Boom,
right. Yeah,
boom. What is that price?
yeah,
370.30, right?
yeah.
What else am I looking for on a move up like that? So I'm going to say, if I don't take some up here at 370.30, then I'm really going to go for a 373, which is another, what, 5% higher. So that's why I took the majority off. I'm not going to lie, at 370.20. And here we sit right here at the gap. So right now we're between gaps, and that's good for the active trader. But certainly, the RSI, and I know, might have moved up a little on the S&P because we're up a couple of handles. But yet again, as I said, when the VIX, I don't even, when the VIX gets above and near 30, one of my new rules, and I've been doing this 26 years, and I don't really like rules, but without rules, there's chaos. But when the VIX gets above 30, I'm certainly not taking overnight. So I can do just as well, trading here. I made back what I lost yesterday. Within 24 hours, I had to trade like a wizard in order to make back what I was by negative P&L yesterday. That upsets me.
Okay.
Because the money that I lost was just like, it seemed like it was easy, especially within the last 10 minutes. Let me go to the spies, especially in the last 10 minutes of the close. This was the last 10 minutes of the close on the spies, from
I know.
366 to 363.
And then it comes in sharply higher.
And then but look at AMD broke low at the end of the day.
Yeah.
And it stopped everybody out that was trying to do it. So and all of a sudden, so I mean, and I know a lot of people that get that from my what I hear is a lot of funds just said forget about it at the end of the day. But you have a stock like Google that was holding, the Google did a print from 99.5. I mean, that stopped a lot of people out $1 when something like Google is imploding. There's no end to this. I'm not even in it.
Ugly.
So, and I'm not saying that's the market leader. There are other things to play, and there's a lot of green on my screen. But, I can look at something like Amazon, same thing. Who's going to, does Amazon form a base here, especially with a gap? It's not, you know what I mean?
They all looked like they were failing rallies when the S&P was 4,300.
The big daddy is holding up. Tesla's hanging in there. I'm not going to lie to you, and it should.
Yeah, it is.
I got some relief today from NVAX, but I sold some like a champion today. And let's look at where my trades were. Because I want to say, even though my average price is 24, you know what I mean? I'm not one of those guys that says I got to make, I'm 20, I got to break even. I'm not. That's egregious. It was a bad trade to begin with. So where are my trades today? Show executions. I'm a seller of NVAX right above here. Sold a little at 2080, and I sold near some at the high, 2130 and 2125. It's a lot better than when it was from 1885. From 4 trading hours ago up to 2160, I'll take. I have to take some off, right? So I'm going to watch it. I'm out of half of the position. I'm still down, not as much. I mean, I saved myself $1.25 on it, but I made some other stock money back. And so I'm just trying to reposition. I'm not trading the best, but I'm not trading horribly. I'm just trying to reposition. I know that it's going to be a good quarter next quarter just because of my numbers. I'm optimistic of a guy, but the VIX is high, and that's what pros do. We always root for a high VIX, coach.
Yeah, and weren't we talking about 2 weeks ago that we were going to be in a negative period until early October?
Absolutely.
Okay, so it was more negative than I thought it was going to be. But we're near the end of end of September. October's next week.
Right. Like I said, this is my opinion. I could certainly argue and make it more believable, but I don't think that's really, it's just like myself with the Goldman indicators and people hedging. It's not, there are just a lack of buyers. And like I said, it's almost like a game of chicken. So as we go into the end of the quarter and the end of the month and the end of the quarter, as we said, within October, which was our initial time frame, let's see if the selling abates and things start forming bases. But I think they're going to hold it down in the beginning of the beginning of this fourth quarter. I think these prices are going to be so suppressed where people are going to get some cheap prices, and then everybody's going to start dipping in a little bit. That's my opinion from a macro view, if you will.
Okay, Mike.
I'd like it to happen sooner than later or more aggressively. And no disrespect to those that own long term. Believe me, I'll take another scar, if you will. But I know we'll heal by the end of the year, if not the beginning of the next year.
Tom Petty, the waiting is the hardest part.
Yeah.
So, I mean, a lot of this is cross currents of, like you said, end of quarter.
End of quarter,
end
the
of
action in the dollar,
Yeah.
exacerbated moves on your currencies that you're making that don't normally make.
Yeah.
The dollar, I could give a thousand cliches. The dollar's not making moves since 1985. 1985. Think about what's happened since then. And it's just happening on a normal Monday night with not major news. What's so funny?
It's true.
There's no catalyst for this. Yes, things are out of control or out of whack.
I think I was trying to remember where I was in 1985.
In 1985, I was 13.
I can't remember.
I was probably trying to sleep with my art teacher at that point. That didn't happen.
All right, your wife doesn't watch your videos.
No,
anyway, so
right.
anyway, Mike, thanks. Anything you want to wrap it with?
No, I know. Well, you know what? Listen. We say 1,000 times you're not going to be short of ideas, but it's more cliches now. That don't let your trades turn into positions. Have a plan. Start small. The best trades usually start working right away. By the way, in this type of market, so there's plenty to do. There's plenty also to do this morning, and there's going to be plenty to do later on. Watch the VIX. Watch the UUP. Watch the 2 and the 5 year, and I'll leave it at that.
Thanks, Mike. And we're going to be back here same time, same station on Thursday.
We are. I'm excited.
And, all right. So we're adding another day to give you guys better coverage.
Demand. Right.
Yeah. So
I actually going to have a wardrobe allowance. Now we're doing more videos. I got to buy more clothes so I don't get
all right,
stained.
buddy. All right.
Cheers. Have a good day.
Thank you, buddy. All right. Mike Venezia, everybody. Thank you for hanging out with us. And we